And now with the recording on, mic check and screen share check, please. Testing 1, 2, 3. Doing all right? Okay. It's only working because I checked. We know that to be true. All right, so here's the lesson for tonight is that Wojciech will hear. So the story of this one is called Reentry is the Key to Sanity. So I want you to notice that he has perfectly executed these trades. This trade is a kata 2 with a tight wrist box that had a quick scratch. He did a stop and reverse for a small gain, a 0.46 gain, and then he calls it an unlucky stop. So listen, there's no such thing as an unlucky stop. There are only stops and only decisions to not re-enter based on not having a plan for re-entry before you got out of the trade in the first place. If you look at the standard trading frame questions, it includes stop and reverses and re-entries as part of the original trade setup before you ever get in on the first one. And so he misses or does not take this trade, does not take this trade, does not take that trade. Nevertheless, he brings in 6R for the day, 6.5R. So that's a good day at work. All of those trades were executed correctly. I might quarrel and say that this one is not using the standard risk box that he had over here, in which case this 1.1 would probably be worth 2 or 3, which is a 50% improvement over the daily gains. But still, we'll take 6R on a day which basically sold off flat, gained, sold off, and didn't have much net move day over day. And so the important point on this one is the symmetry and why you should not have a directional bias, only an appreciation for direction and the potential for movements. So this is the day that Wojciech will never forget, the day he learned that re-entry is the key to sanity and that there's no such thing as an unlucky stop. And we're not going to listen to that again. Don't ever say that again, or we'll remind you of February 10th, 2022. Don't forget nothing. While we're here, I'm going to just show this chart. This is Luke, and these are trades from today, 1594 to 1606. So that's 12 trades that earned 5R. And when we go through that, we're going to see he did pretty well. He got what he was supposed to get. He may have missed a kata 2 here and a kata 2 there, and missed a collapsing dragon there and a kata 2 there. So maybe we'll beat him up later. But according to his trade, he traded his trading plan and he brought home 5R for the day. And that completed his stack at trades 1501 to 1600. And so standard work says that we analyze that. And here's what I'm going to say about it. I want you to study this standard 100 trade report set very carefully. So this is a set of 100 of LC's trades, numbers 1501 to 1600. He has approximately 50 wins at 1.8 average win. It was really 53 and 1.83, but we're going to round that down to pay for commissions. And his losses were 45 for minus 0.49. We're going to round that up to 0.5. So he nets 9, or he gains 90 R. He loses 23 R for a net of 67 R on 100 trades in 2 weeks, with no loss worse than 1 R and a best win of 10 R. It was really probably 11 now that I look at it. And this is over a 2-week period of simple daily trading with 3 standard patterns and no leverage. And I want you to notice his histogram from between -1 and +2, where about 82% of his trades occur in this region. He's positive expectancy, and about 18% of his trades, 1 out of 5, is better than 2R. And so he's got everything that we want, and that is a normalish looking curve, nothing worse than 1R, and the possibility of a fat right tail. That's what you want to do. That is standard work for 100 trades. And then we compare that 100 to the previous sets of 100, and we look at those as blocks to see how the larger aggregate performance is working over time. And so just notice that the average win to the average loss is about 3.5 to 1. Let's call it 3 to 1. So this is a coin flip, 50% to 45%. So a coin flip that pays 3 to 1. How many of those trades do you want? Answer, all of them. Every day. 3 patterns, 1 symbol, attention to detail. He records every trade. He posts all his trades. He puts coaching feedback on it. He listens to our coaching feedback. He takes copies of the videos of the coaching feedback and incorporates that into his trading journal. And he vows to get better every day. And every day he looks at his 6.5, 7 kids and wife, and remembers what he is working so hard for. There's no secret sauce. It's only rare to actually do the work. So well done. Well played to Luke. All right, back to our regularly scheduled program. So today, what we had was the market rejected the 10-day high, gap down, flirted with a return, and then sold off sharply to close in the lower half of the narrowly constricted dragon. We've got the RL30 still sloping upwards. The PSAR is up. The 3-period hull, though, has rolled over. The river itself, Bollinger Mean, is sloping down. We're 6.3% from the swing high to the current price. This also moved us out of the bull and back into sideways volatile today. So swing trading is not to be preferred. The intraday trading is to be preferred, and all other things are normal. In the daily sectors, we had the S&P at minus 1.8. The only one worse was the Qs at minus 2.26. Treasuries were off only 1.6. The Russell was off 1.5. The Dow was off 1.4. and emerging markets were the best performers at minus 0.66. So let's take a look at the things that underperformed even that by sector. So you had clean energy at minus 2%. That's more normal. Blockchain 2.11, lithium and the FANGs down to 2.16, tech, S&P tech 2.6, the global future of finance minus 2.7, ARC Genomics 2.88, S&P Bio minus 3%, ARC Innovation 3.1, BKKT, this is the crypto infrastructure for the New York Stock Exchange, off 3%. That was a swing trade we're going to look at here in a minute. Bitcoin Trust 3.3, wheats and precious metals 3.66. The losing symbols today. So all those financial disruptors got punched in the mouth today. Coinbase 4.5, Squarespace 3.5, PayPal 3.2, Tesla down 3%, Microsoft and Robinhood minus 2.8, Apple 2.36. So all of the tech leaders and financial disruptors got smashed today. To the upside, we had the Bitcoin Trust, or Bitcoin futures, I should say, 1.7, lumber and consumer discretionary 1.2, moonshots 1.6, the large cap crypto blend 1.5, the other lumber 1.1, consumer staples minus 1.07, Mexico marijuana finance and agriculture up to minus 0.71, energy, materials, blended commodity, and oil between minus 0.6 and 0.3. Now the actual gainers for the day, oil exploration 0.11, commercial real estate 0.6, Brazil 0.65, the VIX 9%, and then lo and behold, the ones that we've been specializing in lately, the metals, US Steel 1.3, Cliff Steel 1.2, Rivian 0.3, Devon Energy 0.19, Alcoa minus 1%. Here were some trades today. Let's see if I can find them. So this was the market. Those of you that have been listening to the after show a little bit, we were talking about, some techniques of swing trading and turbo trading a little bit. This was our daily frame of US Steel. And what we've noticed about US Steel over about the last 20 days was that it had reached a peak up here around 26. And we said if it could break out above that, then there was room up into this next stack to take it up to 29. But right around this mark here, in that orange dot in the blue circle, there was a P1. And so the RL10 crosses the baby dragon and then crosses the RL30 outside the river, which is the end of that last run to the top, right? So that run is now over when you get the P1. Then you get this downward move through the edge of the river, through the 90, through the PSAR flip to the Bollinger Band mean. Now we notice the price is crossing the Bollinger Band mean. That's not good. That's a signal that the previous run is certainly done. And you can even see that in when the RL30 crosses the Bollinger Band mean. That's a little, but you'll notice that that one comes a little bit, even though that's only 3 days later. Notice the difference in price action. Like if you wait for the confirmation, price is already down here. So when the RL10 crosses the Bollinger Band main, that actually means that the P1 and the RLXD entry is already a success. So then it leaves the support level that we had marked off from earlier. If you look back at the earlier charts, we had marked 23 as a key support level. So that broke. It then breaks through the southern skin of the river, and now it's beginning to accelerate. It breaks down through the Z2. The fall turns to winter right here as it now leaves Z2. Now we're into a harsh winter, and this thing rushes all the way down to the Z3 and then sells off a little bit more. And then for 4 days, can't really make a new low, even though it got outside of the Z3. It kind of stabilizes in here. So we take a look at this yellow zone as an opportunity, and we say, hey, if that holds, then we're suddenly interested in this little breakout and a higher low and a second higher low. That makes this right here a 1, 2, 3 entry. Here's the RLXD entry. Here's the entry where the PSAR is flipped by price. And again, as you know from our standard way of framing, that if you take that one, you can get your risk down to the lower skin of the dragon, or all the way down, to the Z2, or all the way down to where the RL10 flipped. So you can take any of those as your initial stops. If you wait for the RLXD signal, you end up getting your entry probably in this area. So that is, I'm going to show that as yellow. That's the day that the RL10 actually crosses. This is the day now where you actually get the PSAR flip. So if you're taking that one, you might get your opening there. So in this whole cluster of entries, you're really entering somewhere around 2172, unless you take the 1, 2, 3 entry here. Okay. So you're probably entering somewhere around this level. And in that case, to me, the stop at the edge of the dragon is really okay. So let's say you take the PSAR flip entry. That's sort of the non-aggressive version of this. Now what we had, when we did that multi-time frame, multi-lens analysis, we had looked at, 23 as re-entering this cluster of price action over here. And it's been just motoring through that all the way. We noticed here that winter turned to spring. So now we're in the spring. We had set this one up as a critical state, but it just kept going. And now what I want you to notice is that from all this extension down here at the RL10, when you drop it down from the RL270, that creates the opportunity for a return to long-term fair value. And you notice that the RL270 pretty much has not moved, because it takes a lot more adverse price action than 6 or 8 days to really make a significant move. So the RL270 actually acts for us as a long-term fair value. And you are correct for noticing that makes this orange dot up in here a super pinch, because you have the RL270, the 90, the 30, and the 10 all incite a nicely clustered Z3 pinch. And then you get the sharp move down, sharp move back. And now it's gotten back to full fair value around 25. So now if you take a look at that as the turbo opportunity, And this chart right here shows you where we are inside the daily trade. So what we actually had was a gap down, and that's this. So we had the close here on the left side of the blue line, and then it gapped all the way down, sold off briefly, and then inside the same 1 minute chart started rushing north. Well, when I see, a 40-cent sell off and reversal and almost 50 cents off the low and crossing the VWAP, I take that to be the anomaly. So I buy it with a 40-cent risk box. It comes through the previous Z3, makes a peak, and then I just take a 1, 2, 3 exit for my first trade to get in the money. It doesn't fail back to the VWAP, but it crosses the Bollinger Band, or it crosses the dragon again. So I take it on the long side, but it doesn't follow through. So I take a quick scratch. I chill out. I wait to see how far back this is going to work, because now we got lower highs. So I'm not in a hurry now. But it makes a low and a higher low, crosses the dragon. So I buy it right at the PSAR flip, like I'm supposed to. And my risk box could be as small as that, where I just take it to the VWAP and the PSAR dot. And I just trade one position. It makes a peak, sells off, and I take the sniper exit at the PSAR. I take the immediate recrossing for one, and then it goes nowhere, and I scratch for that one. So that's the turbo portion, the intraday trade that's happening inside of that price action. It ends up closing somewhere, let's see. I think it ended up closing back here around 24.20. So there was an initial surge and then nothing much else the rest of the day. All right, now here is the turbo trade on BKKT. So we are in our third day of this one. The swing trade on this one, I don't know if I have a chart on that one. I don't think I do. Yeah, so anyway, our average price on that one, you will recall from yesterday, was $5 with $1 stop. And so today there was a slight gap. There was a slight gap down. So on the close at 775, our stop is like at down here around 650. It gaps down. We take the COTA 2 with a standard risk box of about 40 cents. So there's our risk. It's not going anywhere, so I take the no lose plus dinner for 2, where it's holding at the edge of the VWAP. It does not fail further, so it makes a higher low. So I re-enter when it crosses and makes a new daily high. Use my standard risk box again. It exceeds the Z3, so I take a 1, 2, 3 exit, super sniper. I'm only interested on the long side, so I see it. It now holds support above the Bollinger Band main, above the VWAP, crosses the dragon to the PSAR. I re-enter, standard risk box, standard move, sniper exit. Now notice that the size of those two moves is almost identical. So that's how much power there is to in the buying pressure on that symbol. So those are my trades today. All right, let's go to the daily. Oh, there was no third leg on that one. You see leg 1, you plan for leg 2, you hope to see leg 3. It went a little higher, and if I remember, it went up to about like 850. I think that was actually like the high of the day, and it ended up closing somewhere down around 750. So there was no third leg. No third leg on that one. I mean, you don't always get a leg 3. You hope for a leg 3, but it turned out that it just rolled from this level. It just kind of collapsed the rest of the day, and I think that was everybody exiting their swing trades. And so the buying pressure in that one feels like it's over to me. So I will be ready to cash the swing trade on that one tomorrow. I'm giving it one more day. All right, let's go to dashboard 1. We are now in sideways volatile because we have now moved within 2% of the 200-day moving average. We're only 1.16% above the 200-day moving average. So that reduces our interest in the in swing trades. Our risk Z has gotten back to about the 0 line. We are still in risk off, but it's not absurdly risk off anymore. We are perfectly postured for big moves in either direction once more. EPP has given us a potential short. If there's more market weakness tomorrow, that would be the first place to look for a short. The Min Pains, Nucor Steel, Coca-Cola, Dow 30 plus American Express. You still got some tech in here on the Max Pains, PayPal, Facebook, Exelon, Netflix, all suffering. Handful of dojis today. Some interesting auto framers in there. So Merck was a doji, but it's also 5.8 to 1. Pfizer 3 to 1. No other real patterns that I like in there. Only one auto framer in the ETFs, treasuries at 3.3. So that's a market that is in maximum indecision. What you had strength on today, though, was metals and mining and oil exploration. Although the numbers were not good, like basically flat, everything else was so bad that it looked pretty good. Brazil was kind of the lone standout among the indexes, along with Latin America. You know, Brazil being a big component of that symbol, and then tech being the big weakness today, whether it was S&P, tech, or NASDAQ. Just a couple auto framers that look interesting. Their treasuries has some potential now with the weakness in the market. The range expansion today makes most everything no longer a squeeze. You saw some directional moves happening today. Spring is still dominating. Only finance is in the summer for the sectors. Mostly weakness today in the Dow and specials, and then in the ETFC, dominated by weakness. Tomorrow could be this failure to make a new high, this rejection at the 10-day high now suggests that support around 445 could be really interesting, because if that doesn't hold, then we're the move back to 430 is now back on the table. And remember, we are 2 sigma in terms of relative weakness compared to the 200-day moving average. The slope of the 30 is still really bad. It's like minus 2 sigma. So we're not out of the woods at all. And this it can't even really get above the Bollinger Band mean. And that puts the bottom of the river in play here at about 445. And then the swing low down here around 430. All right, let's take a look at the traders. The traders and their work today. Yeah, let's see. This one is the other currency, the Bitcoin that Wojciech was working on the fives. That one was, the move happened too fast and he did not want to chase. So I am, +1 to him for that. But he is noticing where the pattern would be, and his stop and reverse would be there. That's one that even though you see that happening, these are 5-minute charts. So this sell-off lasted 40 minutes. So we should be ready for that P1 and bottoming out and that stop and reverse. We should be able to get that. He gets the COTA 2, misses the stop and reverse, tries it here, scratch, gets the stop and reverse here, gets paid, tries it long, tries it short, misses this one. So this one should be around +5 with best play. But I like the fact that you did not chase. This is one we saw already with the at the start, the 6.4. So he was up 6 for the day. Luke, so let's beat him up here. Good scratch, good stop and reverse. Miss the collapsing dragon here. Yeah, that's a good second position. That's good. Good exit, good stop and reverse. Gave back a half. Still pretty good on the stop and reverse here at the PSAR dot with a nice this is like a reset right here. That space in between those two trades, that's about 15 or 20 minutes, and that's reset. So he's minus from the opening flurry, minus 1.3, plus 3.9, minus 0.5. So that's about net 2.1 for the initial salvo. So taking a 20-minute pause to refresh and then reset here with a nice tight stop, gets paid, nice, 1.3. Slow on the reversal, but I think he's waiting to get short of that. But that's what turns that into a minus 0.6 instead of a scratch. This one got a little snake bit, and now I think he did another reset. So he was 2 bars late, but still, that's pretty good. This was the one that was attractive to me, because you're breaking above the RL10 hump and you're all the way back, new high of the day. There's no resistance above. It's coming into the sunshine. If you were ever going to second position it, it would be there. If you do, then you can't let it come back this far. You'd have to take it here. So, but with only one position on, this is not all that painful. He scratches the next short, scratches the next long, gets the 0.9 on this one. So that's a pretty good day at work for 5. Not much to argue with on that one. Here is Cliff. And let's see who this, Charles. Yeah, so the entry pattern on these things, right, is the hybrid frog box. So if you get that, you can take this trade because you're breaking out of a Z3 pinch because there was no gap. So that actually allows you to get long here instead of waiting for the COTA 2. Takes the PSAR exit, stays out of the chop, gets the COTA 2 on the long side, 1, 2, 3 exit. Still pretty good shape. This is just maybe me being a little clearer about how to play that trade, but that's what you're looking for, especially with such a tight range compression in here. You can use that box as your risk box. There was no gap. It moves right off the bottom. So somewhere in here, you could take that entry for future reference. Here's, let's see, this is also Cliff on the 2 minutes. Here was that gap down, 0.7 frog box off the bottom. Could have taken maybe. Might have taken, yeah, this is a good Kata 2. Gets paid. Good scratch. Kata 2 was a little late here. That would have paid off better. I'd have tried this one and probably had a fractional loss. I probably would have taken after three choppy ones, I'd probably wait to see this or this as collapsing dragons. And I would try to get this one. I'd probably go long here and scratch. And then I'd try to short here and scratch and long here and lose. And then I'd take a break. So there wasn't much on the 2 minute one, except for that early first morning move. So because you didn't play that, minus 0.4 is still pretty good for the day. And yeah, this is late in the season, but the entire market was rolling over. So once, if you have a standard symbol and you're comfortable on that, being able to take such a short opportunity, that break of the double bottom right here would be an attractive opportunity trade at the end. And you're playing for a quick hit there, if you elect to try that advanced technique. Here's John with the Aussie dollar also. Brilliant breakdown out of the Z3 pinch. Good second position, great cover. You can't get any better than that. Good scratch. This thing, I think, after 1, 2, 3, 4, maybe I can get out here, because if this is going to fail, it should fail. But you can already see that the slope of the MACD is improving. Maybe I can get a little better entry on that, an exit right here. That's a pretty good stop and reverse that got paid. Good scratch, good short, better long, better reentry, good scratch. Fractional losses. This now feels late, although, you're probably at this point, you were probably playing for the emerging dragon, but that's like the least favored one. Good tight exit, but then you got to take that one right away, and then that pays for it. So coming out of that with 2R, still pretty good shape. Tom adds the VIX on a down day with range expansion for his 10 minute. And that's 4 opportunity trades. Bang. Nice work. Just like you're supposed to. He's grinding his way north with TNA on the early morning ups. And then a break even, another break even, and then he gets this entire move on TZA. That also is the one that rewarded the VXX, because when TZA is in ascendance, that means the market is melting down. So the VIX is going to be a good, reliable trade that day too. And you can see he picks up 5. With some grinding in here, offset by TNA, and then he crushes this one. And then we saw this one for Wojcik already. All right, so that's everything we got for today. Hey, the foundations course is going up to 3,000 on 1 July 2022. So order before. So if you're in the sound of my voice and you haven't signed up for it yet, you've been told. All right, that's everything we got for today. And my wife just brought home some dinner for me, so I'm gonna dash upstairs and enjoy the day. Take good care. We'll see you tomorrow.